Okay, let's just dive right in. 1.1 million. That is the staggering number of brand new members SoFi added to their platform in just the second quarter of 2026. I mean, really think about that for a second. To put it into perspective, that's literally more than the entire population of Austin, Texas, deciding to join SoFi in just 3 months. That's a massive amount of people, shifting a huge portion of their financial lives over to this one single ecosystem. And well, what does all that insane user growth actually get you? It gets you this: $1.2 billion in record-breaking adjusted net revenue. This wasn't just, a pretty good quarter. It was a massive leap. It absolutely proves that their strategy isn't just some theory on a whiteboard somewhere. It's paying off in real time, and it sets the stage that this company's growth engine is firing on absolutely all cylinders right now.
So, welcome to The Explainer. Today, we're going to look under the hood together and unpack exactly how SoFi engineered these massive Q2 financial results. We're going to provide a completely objective, impartial analysis of their strategy, the ecosystem they've built, and the sheer momentum driving this digital finance giant. And we're going to use their very own latest reporting data to see what's truly going on.
Here's our quick roadmap for today. We'll cover 1. The record-breaking quarter. 2. The Everything app. 3. The productivity loop. 4. The Rule of 40. And finally 5. Future growth opportunities. Let's get to it.
Section 1. Record-breaking quarter. The Q2 2026 highlights. We're going to look closely at the raw, unvarnished data from this latest reporting period.
Right off the bat, notice the 40% year-over-year jump to that $1.2 billion in adjusted net revenue. But these aren't just one-off revenue records. Look down at the bottom line. Adjusted EBITDA is sitting at $358 million, and adjusted net income is at a very healthy $160 million. This actually marks their 11th straight quarter of profitability. They aren't just burning cash wildly to acquire users. They're illustrating sustained, highly profitable financial momentum.
And the sheer scale they are operating at right now is wild. They saw record loan originations of $14.8 billion, and total deposits ballooned up to $46 billion. But honestly, here's the standout metric from the whole report. They added 2.2 million new products. Remember that 1.1 million new member figure we just talked about? Well, for the first time, their product growth actually doubled their member growth. Essentially, every new person walking through the digital door is picking up 2 things, not just one. This is absolutely crucial because it means they're instantly deepening the relationship right from the start.
Section 2. The Everything app. Building a digital-first ecosystem. So what exactly is making people adopt so many products at once?
It comes down to this incredibly seamless user experience. On one side, a member can manage their high-yield checking and savings. Then, literally with just a simple swipe, they're suddenly inside SoFi Invest, checking portfolio performance or buying fractional shares. The traditional friction between banking and investing, it's completely erased. The whole shebang is happening inside a single, beautifully designed application.
And it definitely doesn't stop with traditional finance. They've also got a massive crypto platform. Now, what really separates SoFi here is their regulatory standing. They are the very first nationally licensed bank providing members the ability to seamlessly buy, sell, and hold dozens of tokens, which uniquely includes their own stablecoin, SoFi USD. This is super rare. They've essentially taken the Wild West of crypto and brought it into one highly regulated, highly accessible tent.
Of course, this comprehensive app wasn't just built overnight. Check out this relentless pace of innovation. They were founded back in 2011 primarily for student loan refinancing. Fast forward, they launch Invest in 2019. By 2022, they secure that highly coveted bank charter. Then 2025 hits, they launch crypto and stablecoins. And now, in 2026, they're rolling out an AI coach and small business loans. It's just an aggressive, continuous pipeline designed to capture literally every single aspect of a user's financial life.
Section 3. The productivity loop. How the machine grows itself. This brings us to the absolute climax of today's explainer, the underlying engine making this ecosystem so profitable.
Internally, they call this the Financial Services Productivity Loop, or FSPL. Let's translate that corporate jargon into plain English, shall we? This loop is their stated sustainable competitive advantage. It's basically a system designed so that the more people use it, the cheaper it becomes for the company to operate, and the more valuable that customer actually becomes. It's a self-feeding, highly virtuous cycle.
So let's walk through how this machine funds itself step by step. Step 1, brand awareness brings someone in to use just one product, maybe a high-yield savings account.
Step 2, the superior app experience builds immense trust. Now, Step 3 is where the magic really happens. That trust leads directly to cross-buying. The user takes out a loan or gets a credit card. This radically lowers the marketing costs of acquiring a new customer for those secondary products. Finally, Step 4. This creates a much higher lifetime value, generating massive profits that SoFi simply pumps right back into creating even more innovative products. And the loop just starts all over again.
So, what's the definitive proof that this loop is actually working? 51%. In the second quarter of 2026, their cross-buy rate accelerated to 51%. That is a massive 16 percentage point jump year over year. Basically, more than half of all product ads are coming from existing members who just decide to use more of the platform. When more than half of your growth is coming from the inside, your marketing costs absolutely plummet. The machine is essentially growing itself.
Section 4. The Rule of 40. Validating the growth engine. Okay, it's one thing to have a neat theory about a productivity loop, but we need to see how this actually translates onto a real balance sheet.
To do that, we look at the Rule of 40. Think of this as a little Wall Street secret, a golden benchmark, heavily used by the smartest minds in tech and finance. In plain English, you take a company's revenue growth percentage and you add its EBITDA margin percentage. If that combined number is 40% or higher, it proves the company is successfully balancing explosive, rapid growth with actual sustainable profitability.
And SoFi's score? 60%. No way, right? And they haven't just hit that benchmark once or twice. They have averaged a massive 60% score consistently for over 4.5 years. Averaging 60% over 4 years is the financial equivalent of batting 1,000 through entirely different macroeconomic environments. They've totally blown past the Rule of 40, putting them in pretty rarefied air compared to legacy financial institutions. And if we break down their specific Q2 2026 score, it paints a picture of perfect harmony. We're looking at exactly 30% in adjusted net revenue growth combined with an equally robust 30% adjusted EBITDA margin. It's just an incredibly balanced profile. They aren't sacrificing margins just to grow, and they aren't stifling growth just to turn a quick profit. The productivity loop is doing exactly what it was designed to do.
Section 5. Future Growth Opportunities. Expanding the horizon. Now that we understand the engine and this incredibly formidable scorecard, let's neutrally examine where management plans to point this machine next.
According to their latest presentation, their target markets are absolutely gigantic. They're pointing their personal loan business right at the $1 trillion prime U.S. credit card debt market. They're also looking to capture a sizable chunk of the $400 billion student loan refinance opportunity. And perhaps most staggeringly, despite their massive growth, they currently hold less than 1% of the total available deposit market. The runway they believe they have to keep this productivity loop spinning is just vast.
Which really brings us to the core ethos of their entire operation. Management explicitly notes, generating the highest lifetime value of members is a sustainable competitive advantage. Everything we've looked at today, the seamless Everything app, the rapid launch of crypto and AI features, those cross-buying loops, it all relies entirely on this one single bet, bringing users in and keeping them in this digital ecosystem for the rest of their financial lives.
But as they scale from millions of members to potentially tens of millions, the stakes only get higher. They are no longer just a scrappy fintech startup, they're a fully chartered bank staring down legacy institutions. So the ultimate question we have to leave you with today is this. Can SoFi maintain this blistering productivity loop and high margin efficiency as they take on the deeply entrenched giants of traditional banking? It's going to be absolutely fascinating to watch how this plays out in the coming quarters. Thanks so much for joining me on this explainer, and keep learning.